Obviously, all eyes are on what Powell will say. We don't expect him to lay down all his cards and show his hand completely. Really, what we're looking at is his sentiment towards the economy to give us a glimpse as to what his short-term outlook is for monetary policy. If we see a lot more of that dour sentiment talking about some of the cracks in the economy and the challenges ahead, then obviously that would lead to a faster monetary policy easing. The other side of that is if we see Powell spruik the strength of the economy, the resilience, the prospect of that soft landing, then that more moderate easing is more likely. We expect the latter. The economy certainly is slowing, but it's by no means buckling. So we expect that gradual easing of monetary policy. So that would start with a 25 basis point cut in September and then another 25 basis point cut in December.
Yeah, I mean, Jackson Hole meetings are really all about the longer term views and big picture ideas. So we will probably, continue asking that question. Is it going to be 25? Is it going to be 50 basis points? But I do want to bring it back to this region and really talk about EM markets. And of course, there is this big move when it comes to currency markets as well. What are some of the standout implications that you can tell our viewers about if the Fed goes for this pivot next month or sometime this year? What does it mean for EM assets?
Sure. So a lot of the economies in our region really have been holding out for the Fed to cut. They didn't want to leapfrog for fear of that depreciation after a pretty, depreciation being front and center of the story this year. So seeing the Fed cut will certainly give many in our region the ability to cut as well. We've already seen a couple move early with, the Philippines, also New Zealand last week. I think what's interesting for China as well is that if we're seeing the Fed move, it does give the PBOC just that little bit more breathing room to provide support to an economy that really does need it. The supports that have come through have been pretty constrained from the PBOC for fear of those capital outflows that have been a real risk. So with cuts to the Fed, that does allow the PBOC to move a little bit more.